Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action, what's been going on, what we think is likely to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. Really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community, talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Let's jump right down into this. This is the hourly chart paired up with USDT on Binance as our data source. Now we have changed direction again. This is getting a bit ridiculous, really. Basically, what Elliott Wave theory is doing is it is tracking the psychology of the behavior of the people. Right, that's kind of herd mentality, that kind of thing. It's all about psychology. And when we start seeing certain patterns, such as 5-wave patterns, it tells us there's an impulsive impulsive trend in a direction, right? And essentially, what this means is that a lot of people are FOMOing in or finding fear in selling and so forth. And when you keep switching directions like this, it just kind of highlights the importance of smart money concepts so that we understand the manipulation that is going on here, and that we can kind of hedge against these kind of things. Now, unfortunately, we've done exactly that. We've kind of flipped and turned the direction. It hasn't changed too much on the macro side, but it's definitely changing how retail investors are perceiving the smaller timeframes. So here we have Elliott Wave theory, right? We're talking about a triangle. We broke down from the triangle. We confirmed by dropping down lower than our low from the 22nd of March at 8 o'clock p.m. UTC, so 2000 hours. And we can see that we have moved this down. We then moved back up again, and chances are we're going to have to move back down. So this is literally just kind of trapping people out. Now, I would like to think that there's something a bit more going on here, possibly. I mean, we can argue that because we got so close to this entry, it's just fallen short of our lows, and we've kind of reversed from here. So one of the things that we were talking about yesterday was essentially we had this 5-wave structure. That's no longer valid. We can remove that, and we'll remove that one ahead to keep it nice and simple, right? So we can see here that we have this drop to the downside. This is now considered just a 3-wave structure. We can then see that we have got this 3-wave structure to the upside. Now, this is impulsive back to the upside, right? So whereas we were tracking a 5-wave move down, we're now tracking a 5-wave move upwards. And it is unusual because you wouldn't normally expect to kind of see these two things kind of just flipping and turning the way that they are. So we know that this is very unnatural in the way that it's approached in the market. If we throw the volume on here, you can kind of see volumes are decreasing, and this move to the upside right now, this actually probably the last 1 to 2 hours from the point of recording. So we really are talking about the 0700 candle on the UTC clock here. And you can see the volume that comes in to create that one candle. Okay, everything else is actually really low. It's not overly impressive. In fact, as price was pushing up here, you can see volume was decreasing, and that was an indication that we were likely to come down. So something here happened that changed this direction of the market. Okay, so we can see that we can acknowledge that. However, I don't think it's going to be long-lived, and I think we're going to come back down. So let's go into what should happen following Elliott Wave theory's rules and logic, and then brace ourselves for the reversal to that with the manipulation that is going on. So straight off the bat, we can see that we had this move right here. This gain looks like it is a diagonal. If I were to go down to the 5 minutes time frame, you'd probably see that. We then have this move here. It takes us up into a 1.618. So we know that we are tracking a bigger move to the upside here. Now, this internal movement from this low to this one here, this is also an impulsive wave structure. So again, we can take a look at that, and we haven't yet hit 28,360, which would be our 1.618. Okay, so if I just mark that up there, approximately, that's actually 162, but you'll get the idea. When I draw these up, this is what should happen. Okay, we should see a wave 1, 2, 3, 4, 5, right? And all of that would be a wave 1. Okay, and then over this side, we'd see a wave 1, 2, all of that is wave 3, down for 4 and up for 5, right? And we'd see that we'd break up above that existing high. I think there's a low probability of that, but it is what it is, right? And that would be an interesting kind of structure. Then, of course, we'd look at this area, and this does not really fit Elliott Wave theory. So, and the reason for this is that this wick right here tells us that there's not really any decent wave structure inside it. Basically, we wick down, and we hit the lows, we liquidated any longs, and then they take the price back to the upside, right? So this move over here makes it very interesting. I don't want to focus on that just yet because it wouldn't really fit the impulsive structure, and instead would make this entire thing look corrective. But we'd still have to kind of follow this through if this were to happen. However, what do I think is actually going to happen? Well, I think that's going to be different. And I think one of the things that we need to acknowledge here is we are going to finish a subwave count of 5 and we'll come up towards the $28,400 level. Or alternatively, we're just going to break right the way down. Now, invalidation levels are going to be key here. So let's go ahead and draw those on, right? The important levels that we're going to want to know about. So in fact, I'm going to remove this one as well. I'm going to remove the little yellow lines because I think they're just going to get messy. And I'm just going to move these back into play, right? So over this side here, what do we see? Well, I'm going to remove our yellow box because I think that's done for now. The obvious is that we are still technically able to look at this one here as a corrective structure for now to the downside, and we still have to come back down. So there's always that. So that gets confirmed as invalid once we cross higher than 28,194. Okay. On the low side, we have this one. So we have $26,508, and we should basically prevent ourselves from going down lower than that. If we want to be in the bullish movement, if we have those 5-wave structures, we know that that's an invalidation. We can't really go down any lower. Now, in terms of that 5-wave count, right, that 1, 2, kind of 3, 4, 5 structure, right, where do we really know the invalidation levels to be? They're going to be right here, right? So basically 27,210 to the penny. We can't go down lower than that if we want to keep this impulsive trend structured upwards movement, right? If we want to be bullish on the market, we need to stay above 27,210. Okay, so that's kind of where that sits. So we can kind of acknowledge that that's kind of where we are with Elliott wave theory at the moment. We are all over the place, and it's unusual and it's irregular. Okay, and the reason for that has to be due to the nature of what is going on in the background, which is unfortunately a lot of manipulation with USD, such as the DXY. A lot of Forex traders are actually having a bigger impact on the markets than maybe they even realize. And basically, you know, in dropping the dollar and in favor of other currencies, all you're really seeing is the DXY go down. And the DXY going down means cryptocurrency assets go up. And this is all because essentially, you know, you're going to need more dollars to buy your cryptocurrency asset, because although you're paired with USD, you know, if the value of the dollar against other other assets go down, you need more dollars because of the intrinsic value of the asset. So we have to kind of bear these things in mind, right? And for the most part, you know, if Forex traders continue to kind of come out of dollars, and if general public also come out of dollars in favor of other currencies, then we're going to see more like this. And it could just be a DXY fueled raging move to the upside. But, you know, again, I don't think that's really something that we're going to want to transact on. So you're going to have to go back into dollars at some point and then trade your dollars to the other assets and so forth. So we have to kind of consider here that it's not necessarily the best thing. It's like hyperinflation, $1 million Bitcoin, all those kind of things that you see in the space. And well, that's great, but you're not going to want the $1 million at the end of it. So let's kind of keep an eye on this. Are we going to complete this trend structure to the upside? We know where we can't go. We know that we'd have to be above the $28,400 and so forth to kind of complete it. So we'll keep an eye on it. The other thing to kind of bear in mind here is that this could be a much bigger reset, a much bigger reset, and we just can't even see it yet, right? And what we'd look at is that as an A, this as a B, and then come down here into a C. That's also a possibility, but we wouldn't know that until much later on. So it'd be interesting to kind of track. Now, from a smart money concepts point of view, we've left more institutional candles behind. No surprise here. You can see the manipulation that is going on. If I zoom out of this, they've been stacking these, right? These institutional candles, that's what they call them. They basically create imbalances in the order books. Too much buying pressure at the low side that the sellers inside this area can't fill it. Can't fill the order, so price jumps to the next area where the order can be filled. And the reason that you see these gaps and the reason that they're really important is you do not normally leave these behind stacked like this, because we have to consider that an institutional buyer put a buy order in down here, okay, and they were able to complete their order up here, right? That's what's left the gap behind. As a buyer, if you're an institutional buyer and you're buying a lot of Bitcoin, are you going to continue placing your buy orders like this on this way up here and keep stacking it, when originally what you wanted to do was buy it at 20,000, and now you're having to pay 22,000, you're having to pay 23,000, and so forth, right? It wouldn't make a lot of sense unless, of course, your aim is to just push that price higher and create a lot of FOMO and create a lot of liquidity, okay? Because these things getting stacked the way they are is giving me a lot of cause for concern and is another indication that manipulation is occurring here. We've got to think about who the people are that are making the most from this. And it's going to be your market makers, and it's going to be your whales. It's not going to be your retail investors. Okay, the FOMO from retail investors is crazy. But these institutional candles, these fair value gaps, these imbalances in the order books, they will eventually have to get filled out, in my opinion. Now, we're above the equilibrium. We're above, again, the 250 EMAs, and we're finding resistance up here. And we do have a strong high. Okay, so a strong high, weak low. This is an indication that we are likely to find reversal here, even though we are trending under that 5-wave structure. I think it's actually going to pull back down and it's going to reverse on us. So interesting kind of things to keep an eye on. A lot of people probably would have been liquidated from their short positions. Fortunately, I wasn't shorting. I was actually looking for the long because I did think we're going to be long, but I've missed that boat as I was asleep during all of this. But nonetheless, I'll be looking for the next opportunity as it kind of arises. But for smart money concepts here, we are in a bearish state. On this hourly chart, look right here, we have switched to bearish. We haven't broken this. We are still bearish. This is just a relief rally from the initial pullback by the looks of it, according to smart money concepts, with a strong high and a weak low just above equilibrium here. Chances are we're going to have to fill this gap, come down to equilibrium again. We'll see how that manipulation plays its part, but for the most part, I'm expecting a move to the downside. Elliott Wave theory says we should be tracking up. Smart money concept says we should be tracking down. I think down is the most logical. I think Elliott Wave theory here at this point isn't really giving us a true representation due to the level of manipulation, which we can see from smart money concepts. So keep a close eye on things. I expect invalidation on the Elliott Wave theory side of things, and I expect validation from the smart money concept side of things. Let me know what your thoughts are down in the comments below. I'm going to leave this video right there. If you found it useful and informative, smash that like button. Really do appreciate that. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out. Linked in the description below. Until the next one, though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not